Most people pay way more tax than what they need to. HMRC aren't exactly going to stop you from making that mistake. What if I told you that there are secrets that can help you keep more of your hard-earned money? I'm talking about strategies that can help you save thousands, and HMRC doesn't want you to know about them. Sounds crazy, right? But it's true. So in this video, I'm going to explain exactly what these secrets are, why HMRC doesn't want you to know about them, and if these tricks only work for business owners or if employees can use them as well. But first, are these loopholes legal or could you get in trouble? Don't panic, you're not going to get locked up and the key thrown away for knowing these secrets. Everything I'm going to go through with you in this video is 100% legal. These are strategies and tools that are approved by HMRC, and I'm going to be walking you through exactly how to use them in simple steps. Imagine paying less tax and also saving for your future. With this first secret, you can do both. This is one of the best ways to save on tax because you get relief at your marginal tax rate. That means if you're a higher rate taxpayer, you get relief at 40%. So if you want to receive a 40% tax relief, well, the government will just add this money directly into your account, then you need to be making the most of your pension contributions. They're an incredibly tax efficient way to be able to save for your future. For example, if you contribute £1,000 into your pension and you're a high rate taxpayer, then the government will automatically add an extra £400. This reduces your taxable income, meaning you pay less tax now and also build wealth for the future. How would you like to keep more of your salary and get loads of benefits but without paying the tax man? This second method is one of the easiest ways for you to reduce your taxable income. Essentially, you agree to reduce your salary in exchange for non-cash benefits that are exempt from tax. These benefits can include things like childcare vouchers, bikes for work, or even a company car. This reduces the amount of income tax and national insurance that you pay as your taxable salary is now lowered. For example, let's say you have a monthly salary sacrifice of £400. If you're a higher rate taxpayer paying 40% tax, then you're going to save yourself £160 every single month. This means you're effectively getting a bike, childcare vouchers, or a car for less, whilst also paying less in tax. This next secret is a hidden tax-free £1,000. If you're earning money on the side, then the trading allowance allows you to earn £1,000 every single year without paying any tax. So whether you're selling things on eBay, you've got a small online business, or you're doing some freelance work, the first £1,000 is completely tax-free. For example, if you make £1,500 from your side hustle, the first £1,000 is completely tax-free, so you only pay tax on the remaining £500. This can save you a considerable amount of tax, especially if your side hustle is just a hobby. The trading allowance is a simple and yet often overlooked tool for someone that's got a bit of income on the side. Now let me tell you about a guy called James. James was running a small tech company and he was paying himself a high salary. But when he switched from a high salary to taking dividends, he was able to save thousands in tax. And here's how you can do the same. When you're the owner of a limited company, you have the option of paying yourself a mix of salary and dividends. This is a massive benefit because dividends are taxed at a lower rate than salary, so you can save so much on tax. For example, if you pay yourself a salary of £50,000, you're going to pay income tax and national insurance on this amount. But if you take a salary of £20,000 and then dividends of £30,000, you're going to benefit from much lower dividend rates. So you'll be paying less tax and taking home more money if you just spend on things that you actually want to spend it on, rather than just giving it to HMRC. If you're investing in stocks, property, or any other assets, here is a tax hack that can help you keep more of your gains. There's a secret allowance that allows you to make up to £3,000 in profits from selling your assets without paying any tax on your gains. This allowance resets each tax year, and any gains that are made above this threshold are taxed between 10 and 28% depending on your income level. And if you're married or in a civil partnership, you can actually combine yours and your partner's allowances, so you effectively double the tax-free amount. This is called the capital gains tax annual allowance. And what it means is that if you sell an asset and you make £5,000 in profit, you only pay tax on £2,000. This makes the allowance an excellent way for you to manage your investments and reduce your tax burden. Now you might be wondering, why doesn't HMRC want you to know about these strategies? And the thing is, it's pretty simple, because it means that you pay less tax, and the less tax you pay is less money in HMRC's pocket. And here's the big question, do these strategies only work for business owners, or can employees use them as well? Well, there's good news, most of these strategies are available to business owners and employees. For example, salary sacrifice can be used by absolutely anyone. Whether you're an employee or running your own business, if you've got access to a salary sacrifice scheme, then make sure you're taking advantage of it. And pension contributions are available to absolutely everyone. And if your employer has a pension scheme, then make sure you're contributing as much as you can, especially if they're going to match your contributions. Side hustles and the training allowance, another great opportunity for employees. If you're making money on the side, that first £1,000 is completely tax-free, whether you're employed full-time or not. The capital gains tax allowance is available to everyone as well, whether you're an individual selling personal assets or a business owner selling business assets. But dividends are only available for business owners, not employees. So if you've got a limited company, then paying yourself in dividends can make a huge difference to your tax bill. So there you have it. There's 5 powerful tax saving secrets that can help you keep more of your money, whether you're a business owner or an employee. HMRC may not want you to know about them, but now you do. If you want to make sure that you're not paying too much tax, you need to start implementing these strategies as soon as possible. And if you want more tips like these, I'm actually giving away 30 tax saving tips. All you need to do is follow the link in the box below and don't forget to subscribe.